Welcome back to StockSpy, where we dig deep, decode the market, and uncover hidden stock potentials before it becomes the headlines. Today, we are entering a battleground of silicon giants, NVIDIA, Intel, and AMD. Which one leads the AI race? Which one's a value trap? And which one could be the dark horse winner? Let's dig deeper. Let's start with the basics. NVIDIA, once a gaming GPU king, is now the undisputed champion of AI infrastructure, powering everything from ChatGPT to Tesla's autonomous vision. Intel, on the other hand, is a legacy powerhouse, known for its CPUs, now struggling to reclaim its crown after manufacturing and innovation delays. AMD is the underdog turned contender, with strong CPU and GPU offerings. It's becoming a key player in both consumer and data-centered markets. Each has a unique origin, but in 2005, nothing matters. All eyes are set on one thing: the AI chips. Artificial intelligence, it's here, and it's changing everything from healthcare to finance to defense. NVIDIA's H100, its upcoming Blackwell chips, are gold standards. Nearly every large language model from OpenAI to Meta runs on NVIDIA's architecture. Intel is pivoting hard into its AI with its Gaudi line of accelerators, boasting performance gains and cost efficiency, but it's still playing catch-up. AMD has launched MI300, which is finally making waves and gaining traction with hyperscalers like Microsoft and Meta. So who's got the edge? Let's break it down. Let's look at the numbers. NVIDIA, it has a market cap of 2.5 trillion with a gross margin of 75%, revenue growth year over year of 250%. Dominates the AI training GPU market with 90% shares. Intel, on the other hand, has a market cap of 120 billion, still heavily reliant on the legacy CPU market. Negative free cash flow recently due to the foundry investments. Trying to pivot, but very slow. AMD has a market cap of 250 billion. Strong growth in EPYC servers, CPUs, and MI300 GPUs. It has a gross margin of 50%. More agile than Intel, but still trails NVIDIA in AI. If you are purely looking at the momentum, NVIDIA is the beast to beat. But that kinds of runs up also makes it expensive. Really expensive in this case. Let's compare the value for money. NVIDIA's PE ratio is over 70, which is very high even with the growth. Intel's PE is, on the other hand, it's 12. Cheap, but comes with very high execution risks. AMD's PE is at 40, which is priced for moderate growth, but potential still undervalued if MI300 gains traction. So what looks cheap isn't always safe, and what is expensive isn't always overvalued. Let's go through the trends. AI compute demand is exploding. NVIDIA is still the default for enterprise deployments. Intel is making massive foundry investments, hoping to compete with TSMC, but that's going to be a multi-year play. AMD is also gaining shares, particularly in inference chips and AI-adjacent compute markets. Our tip here is follow the developers and the cloud giants. Where they go, the money follows. None of our investigations are complete without analyzing the risks. Let's go deep. NVIDIA is vulnerable to regulations. US export controls on China could hit its bottom line. Intel is burdened with capital-heavy foundry expansion that may not pay off. AMD faces intense competition and need to scale up its AI hardware presence quickly. And do not forget, the valuation compression is always a threat if AI boom cools off. So here is a summary. NVIDIA, the undisputed AI leader, is pricey but dominant. If you believe in AI for the next 5 to 10 years, this is the flagship. Intel, on the other hand, is high risk, high potential if their turnaround works. but it's going to be a long game. AMD is a sweet middle ground, underhyped, solid execution, and room to grow if both AI and server markets. Our recommendation: NVIDIA for growth, AMD for balance, Intel only if you love contrarian deep value plays. So, which one are you buying or avoiding? Let me know in the comments below. Don't forget to like, subscribe, and hit the bell so you never miss your next Intel drop from StockSpy. Until next time, stay sharp, stay curious, and keep your eyes on the charts. Bye.